Hey, good morning, everybody. It's Brian. 26th of October. It's Monday, final week leading up to the election. So markets may remain flat. Might see some big breakouts. Who knows? I don't know. No one knows. We're just going to run through the numbers as we see them today. See what's going on. See what opportunities are potentially out there, and then we'll do some recaps if we have some trades that line up that meet the method that we're talking about here. All right, so let's kick it off. We're gonna start off over on, just pull up this screen right here, this one. Yeah, and I've got all three up. We've got S&P, crude, and gold, which are the three we typically talk about here in our quick morning updates. And you'll notice I've got my BTX indicator installed on each of these, and what that's showing us, it's showing us the blue and the orange are telling us our 4-hour bias, and the green and red is our 30-minute bias. Now, these were all green and red. Everything was green and red previously. I changed it so that it might be easier for you guys to be able to see which is the 4-hour and which is the 30-minute. We'll talk about that in a second. But ultimately, what are we looking at? So starting it off with the S&P, we're kind of hanging at a key level down here, 34.15, 34.16. This area has been tested and retested really since the beginning of October. It was a resistance point in early October, and then here out since the 19th, it's been a support level. So we've seen price float back down here and repel off of it a number of times back since the 19th of October. We've seen it bouncing around, testing this area a few times. The bias is mixed, though. You know, we've got a 4-hour bias that's long and a 30-minute bias that's short. What do we do with that? Well, when we've got a mixed bias, we stay away from it. You know, because ultimately what we're trying to do here is we're trying to trade in the direction of the trend. We want to take trades that are lining up either as a breakout, as a pullback, or some combination thereof, but trading in the direction of the trend. So we need a trend in order to trade in the direction of that. And the way that I identify a trend is I look at multiple time frames, and I look to see what my bias is on the 4-hour, and then I look again on the 30-minute, and I go, hey, if those two are in agreement, then I've got a confirmed bias in a certain direction, whatever that is, up or down. And that allows me to then begin looking for trade opportunities in that direction. If the biases are mixed, where one's long and one's short, that tells me, hey, Brian, the market's kind of mixed up right now. Maybe it's a good time to stay away. I know a lot of traders, especially new traders, don't want to hear that. They want to, oh man, I want to trade. I want to trade right now. Give me a trade idea. But the reality is, there are days and there are times when you shouldn't trade. The indicator helps us identify that with a quantitative method of looking at it, so that it's not emotion driven. It's not us coming in and going, well, it's the last week before an election and this is happening, and that's happening, this could happen, that could happen. So based on those emotional things, I'm going to make a decision to trade or not to trade. This indicator definitively says, based on quantifiable information, you've got a mixed bias, stay away from it. All right. So anyway, I don't want to go down this long path about, the psychology of trading, because that's a huge piece of what we're going to do here. But ultimately, mixed bias on the S&P, that's telling us, hey, we're going to sit on our hands. Crude is a confirmed short bias. So we've got 4-hour is short, 30-minute is short. So we're going to look for short trading opportunities over here on crude. What does that look like for us? Well, a couple of different things. If we could look at it as just a straight breakout. So if we're just looking at straight breakout trades, we could look for things to break down below 38.50. So just a good push down below 38.50. That'd be a breakout to the short side. Of course, I think most of us, like me, want to get things at a bit of a discount, get a better price. So following the BTX method, what we'd be doing is we just simply wait for price to start making higher lows and higher highs, so meaning it's going to pull back to the long side, right? It's going to start going long here, making higher lows and higher highs, kind of like we're seeing back here, higher lows, higher highs. And then as it makes a higher low and a higher high, then we could trail our entry point at the bottom of that previously closed higher low, and then look for it to break south, break down as it breaks through the bottom of that previously closed candle. So that's the BTX method, and that's what we'll watch for that today, okay? So we're gonna look for short trading opportunities on crude today. That's the directional bias that's confirmed on the 4-hour and on the 30-minute. Now, again, I said we're gonna look for, I'm not telling you what to do. I'm a dude out here on the internet that's giving you some ideas. It's up to you to execute your trading strategy, and it's up to you to make your final decisions on that. I'm just throwing out some ideas here for you. So we're looking at potential short opportunities on crude. We start breaking back up, and we crack above 40, by the way. No matter what our directional bias is, if we break above 40, don't keep looking to short it from there. Let it start going north and do its thing. That's kind of the decision point here, by the way. So if we start floating back up on crude, we break above 40, stay above 40, just leave it for the day, and we'll come back and find something another day. Gold, short bias here as well. We've got short bias in the 4-hour and also here on the 30-minute. We are hanging around the decision point on gold, 1900. Big support level for us on gold. So, that's a toughie. I would say we break below 1900 if you're just looking for a straight breakout to the short side. Breaks below 1900 would be the opportunity to go short, or we utilize the BTX method, which is saying, hey, we're gonna wait for price to make higher lows and higher highs, and then we'll trade a breakout of that previously closed higher low. Very simple way of doing it. Now, we get up here and we break above 1915, 1918, that would be the point to say, hey, I'm gonna stop looking for shorts and just leave it there and come back and see what we have another day. But for right now, based on current market conditions, we'd still be looking at short opportunities on gold. I mentioned real quickly, because I'm running out of time, I mentioned I changed my color scheme here. You can do that just by going into your BTX indicator, clicking on settings, and then going over to style. And when you go over to style, you've got your different colors, line types, line thicknesses, everything there that you can change to customize how those look. So that's how I changed this from the green and red to an orange and blue in order to differentiate it from the 30-minute, to make it easier for everyone else to see what the bias is on different time frames. All right, so that's it for me. Those are some quick trade ideas along with some key levels to watch. As with everything, always trade with a stop. Make sure that you've got your position protected. Because while there isn't any high impact news expected today, there's always that left field stuff, especially leading up to the election, especially with a lot of what's happening in the world and in the news today. At any moment, there could be something that's very impactful to the market that comes out. I think we've all kind of written off the CARES Act until after the election, but who knows, something comes out of left field and boom, it either spooks the market or, amazingly just rallies the market. But I don't know if we'll see anything there, but no one does. No one knows, right? I think the expectation is we don't, but always plan for those anomalies, right? All right, so that's it for me.